Welcome back to a brand new episode by the Dutch Investors. I'm here once again with my friend Sonny from Secret Sauce Investing. And today we're going to talk about the global spirits industry, what is going on, why the headlines are so gloomy, if there's actually an opportunity here. And we'll talk about companies like Diageo, Pernod Ricard, Campari, maybe a couple others. Now, Sonny and I have been elbows deep in the research for months now, actually. It's been a little while. He's got a lot of experience, which will help in today's episode. And he just launched his own whiskey brand, which is pretty exciting, I guess, Sonny. So are you ready, Sonny?
Yeah, well, I think as you said, we've been researching this for a few months now, so ready to get stuck in and talk about something I'm very passionate about, which is spirits and whiskey as well.
Well, let's not waste any more time and dive into the episode. Well, Sonny, today's topic is hits pretty close to home, right?
It does. So it's a spirits or the whiskey industry is something I'm very passionate about. I've worked in it for about the last 5 years, and before that, worked in the spirits industry as well. So being from Scotland, it's something we're always very proud of. Is our national spirit, which is Scotch. And just recently, if listeners are interested, I launched my own brand, which they can find at whiskycraft.co.uk, which launched at the start of July.
Pretty cool. I haven't been able to try one of your bottles yet, but we'll have to figure something out. I'm not really much of a whiskey drinker, but I do have a little spirit with me. I think it's Smirnoff. Yeah, it's not the most strong liquor, but I like sweet drinks.
So you've just not had good whiskey yet. That's the issue. So when I either come to the Netherlands or start exporting to the Netherlands, we can do a bit of an online tasting at the very least.
We'll have to. So perhaps we could start today's episode with a little bit of historical context, and then just jump into the different companies, the dynamics, and we're going to talk about our bull, base, and bear case scenarios for this industry. And I think the listeners will have a lot of takeaways after this episode.
Yeah, really looking forward to it.
Yeah, I think talking about the historical context a little bit makes sense because it does play a role in this industry. You know, alcoholic beverages have been woven into human history for millennia. If you think about it, beer paying workers in ancient Mesopotamia, which is modern day Iraq, or even wine, which was the preferred drink during the philosophical debate in Greece and Rome, and the distillation of alcohol spreading through Europe in the 15th century with the help of the printing press, and this way they could write instructions and recipes for distilling wine and beer into stronger spirits such as brandy and early whiskey. A couple things that I read in the books during our research, and pretty fascinating if you think about it.
Absolutely. And if we give a bit of a nod to both our homelands, the oldest working or distillery in Scotland today is the Glenturret Distillery, which was founded in 1775, which gives you an idea of really how long whiskey has been a common theme in Scotland. And then for your homeland, the oldest working spirits producer is Lucas Balls, and they were founded in 1575, and to this day still produce liqueurs. So there you go, two interesting facts from our homelands.
Yeah, Lucas Balls. I actually know the business a little bit. I think they sell the Passoa brand and Pisang Ambon, and 1575. That's pretty ridiculous if you think about it. So yes, long ago.
Yeah, so just it gives you an idea of the staying power of a lot of these alcohol brands, and the fact that some of them are coming up for half a century old. They're not too dissimilar to something we previously touched on with LVMH, a lot of these champagne brands being around half a century old and so on.
You know, after this month-long research into the industry, the million-dollar question is basically, why do people drink alcohol, and is this here to stay, or are we just in a declining industry from now on? And it's a difficult question to answer, of course. Otherwise, I mean, if we knew the answer, we would be very rich, right? But if you think about it, it's so rooted in history that, you know, the Lindy effect, brand heritage, all comes into play here. And so it makes me hesitant to think that alcohol is just going away. I mean, wine was part of rituals, it was imported for religion. Over time, wine came to signal refinement and culture. It's why it still carries a sense of luxury today when you go to a restaurant, for example. It also gives people a sense of community, happiness, and belonging, even. And sometimes it's just a simple way to forget your problems and enjoy and be in the moment. And of course, you could argue that it does more harm than good sometimes, but I think those are some of the reasons that we humans will still be drinking alcohol 100 years from now. What do you think, Sonny?
Yes, I will just echo that sentiment, because I think that if you consider alcohol and spirits in particular, they're very much a social lubricant. They make people feel relaxed, or they help people at parties or enjoy with friends. It's very much something it's quite consistent with human history, and it has been for hundreds of years. But if we take that a little bit further and consider, in particular, brown spirits, the likes of whiskey and cognac, because they very much they don't spoil like beer. There's always this demand in this luxury aspect for them as well. Something obviously we have with wine. So one of the interesting facts that I pulled up for this podcast was the fact that the oldest bottle of spirits ever sold was a bottle of Macallan 1926, which sold for 27.2 million at Sotheby's in November 2023. So it just shows you the fact that spirits in general, in particular whiskey and cognac, can offer real demand and possibly even some form of investment for these high-end buyers.
So, Sonny, we're talking about the spirits and alcoholic beverages industry today. Diageo is down 52% from all-time highs. Pernod Ricard down 54%. Campari is down 56%. Brown-Forman down 56%. And I can keep going on for a while. So, what is happening? What's going on here?
So I think we'll get into this properly in the sort of the bull and especially the bear case. But in very much a short answer, there is obviously quite a considerably challenging macro climate just now. We came out of COVID and there was this spike across the pandemic because people had more disposable income, they had less to spend it on, so they tended to drink more at home, despite the hospitality, the bars and so on sector suffering. So there was a lot of investment by the spirit manufacturers and producers to support this demand, but obviously as sort of 2022 and so on eased in the pandemic, people tended to return to work.
Yeah.
What we found is there was this upfront investment by a lot of the spirits producers, but there was no longer the demand. And as we've got into quite a challenging macro climate, we've also obviously seen the tariffs being imposed by the US, who's obviously the biggest consumer for a lot of these brands. It means it's been challenging for a lot of the producers who effectively have invested to meet high demand that hasn't materialized as we've entered 2024 and 2025. And then just to add to that, the Asian, and particularly the Chinese consumer, who was driving a lot of premium and luxury growth for these spirits, has largely fallen away or disappeared.
Yeah, so let's give some context to the listeners about what kind of companies are there, a couple names, and perhaps just to give some context around the company, how much revenue perhaps they generate, if we can find it real quick. What I didn't know before doing research was I know a couple companies we'll mention. Diageo, of course, which you own and our analyst Maotai owns. Pernod Ricard, of course, with the brands Absolute Vodka, Jameson, Havana Club. Diageo, like I mentioned, what I'm drinking right now, Smirnoff, but also Johnny Walker and Guinness. But I didn't realize that the Asian market was so big. So I found this company called Maotai. I think that's how you pronounce it. Generate almost 25 billion in revenue, US dollars. And they sell this national Chinese drink called Baijiu. And it's one of the most valuable brands. And it's an incredibly large company. Roughly $300 billion market cap. So it's 10 times larger than Pernod Ricard.
Yeah, it's pretty wild that something out there that even people like you and I who do a lot of this research and investing almost weren't even aware of this. As I've just pointed out before the podcast, I brought a bottle of Maotai along to show you that
Yeah, so cool.
this is what it looks like, but it doesn't necessarily get sold here or in any place I'm particularly aware of in the UK, and I don't think you'll be aware of too much of it being sold in the Netherlands. So it's really, really interesting and fascinating, and obviously what's maybe inspired this podcast is I did release a piece looking at these public spirit companies, and I have included Maotai as well. However, it's not particularly a company I feel too confident either investing in or talking about too much, because it's just something it's so intrinsic to China, but obviously globally it's not sold far and wide.
I think you gotta be a native or just live there to really know its importance or strength, and it's a bit out of our circle of competence maybe.
Yeah, so if you want, I'll just run through some of these companies that are in existence, and this comes from my piece on public spirit companies. So
Yeah, please do. Yeah.
Diageo, based here in the UK, we're quite familiar with it in Scotland because they own so many of the whiskey distilleries. And even if I drive 45 minutes, an hour north, it is the case that it can find so many of these distilleries. Don't have to drive too far whatsoever. When I published my piece, they had a market cap of about 42 billion, and that's in pounds, with their spirits being worth, or the spirits division being worth, about 22 billion, so almost just about half their market cap, because they do have about 19% of sales that's made up from the likes of Guinness and wine and so on. So if we just focus in on the spirits division, you're about 4/5 of their revenue. If we then come down, we've got the likes of Campari, who are based in Italy. Their two big brands are Campari and Aperol Spritz. And I know somebody like yourself is maybe not massively into their alcohol. I'm sure you've seen this massive rise and boom of Aperol over the last couple of years. So that's really been the driver for Campari, who come in at around a market cap sort of just shy of 7 billion. And then if we come down, we also obviously talked about LVMH previously. LVMH isn't the easiest to talk about because they also they've got their champagne included in their spirits and wine division, so it's not easy to dissect how much of the revenue comes from spirits. But just sort of indicatively, we had that number is at about 5.9 billion euros, but obviously that does include the champagne as well. However, LVMH is obviously behind the likes of, as the name would suggest, Hennessy, and then here in Scotland they have the likes of Glenmorangie and Ardbeg distilleries. And then if we come on to Pernod Ricard, based in France, their market cap is about half of Diageo's, but that's in euros, so they're about 22 billion. And with that, they have the likes of Ballantine's and Havana Club. Just a couple as well, sort of off the beaten track, that will jump back into the European ones in a second. But we've also got Beckel, the company behind Jose Cuervo, who are the biggest tequila producer in the world. They're based in Mexico, so they're a bit trickier to invest in because they are listed on the Mexican Stock Exchange. But these guys are, I think they're about 4.4 billion US dollars for their market cap. And then if we come a little bit further down, we've got Brown-Forman, based in the US. Probably the most recognizable spirit is Jack Daniels, sitting at about 13 billion US dollars. And lastly, probably the smallest of the bunch, we've got Cointreau, who are based in France. So they've got Remy Cognac, and then they've also got Cointreau de liqueur, and they're again sort of coming in as, say, about just 2.5 billion euros for the market cap, so the smallest of the bunch.
Yeah, that's a great overview. Before we can maybe go to our bear, base, and bull case for the industry, which I'm very interested to hear your thoughts on what you think and how you think about each different scenario. A couple industry dynamics I thought were probably worth sharing, and I'm curious to hear your thoughts, whether you agree with them or not. So from the things I found and read in several books, is that local tastes matter a lot. You can't just sell every single spirit in every country. The local taste differs a lot. Just look at the most sold spirit by volume, Baijiu, and we don't even drink that in Europe and North America, so it's very local to especially China. Another important industry dynamic is that regulation. It's one of the most heavily regulated industries in the world, maybe together with gambling and tobacco. And I think this is also one of the largest risks, which we'll probably get to later. Another interesting thing I read is that these companies don't sell direct to the consumer. So they sell to a distributor, which means that tracking your stock and your inventory is a lot more difficult, which is one of the reasons we're seeing this oversupply or undersupply dynamic very often. And lastly, it's a very consolidated industry. There are a lot of like single brands coming up. Think about the Conor McGregor brand coming up, or a celebrity coming up with a new spirit or a new brand, but they almost always get acquired by these larger companies, incorporate them into the holding structure or into the company and distribution network. And that's why we see, like, what is it, 4 to 5 large companies dominating most of the Western world and a couple in Asia, right?
Absolutely. We've seen a lot of M&A action when it came to particularly celebrity-linked spirit brands. Probably kicked off with Casamigos for George Clooney. We've seen the likes of Conor McGregor, as you've just touched on. Proper Number 12 was acquired. We also saw Aviation Gin, who was backed by Ryan Reynolds, was also acquired. And interestingly, maybe not so much here in the UK, but certainly more in the US. I know the likes of, I think it's Kendall Jenner, and then also Dwayne Johnson have both launched tequila brands that, if those continue the growth trajectory they're on, then certainly could be the case that they are acquired by Diageo or Pernod or Brown-Forman. But it's interesting because these operators, because I suppose back to your original point of not selling direct to the consumer, they ultimately have to be good at two facets of their business. One is distribution, because they are ultimately distributors and distributing to or selling B2B, and then marketing. They have to innovate with their marketing, and they have to maintain that engagement with the end consumer, despite obviously not selling to them. But a lot of this allows for quite significant gross margin and operating margins for these spirits companies. And just as a sort of final point there as well, something we have seen in recent years is we've seen the likes of spirits taking market share from beer and wine, who necessarily haven't innovated as well as the spirits companies. So maybe something we can talk about a bit later. But yeah, with these guys, arguably should be maybe a lot higher valued than they are just now.
Well, maybe we'll get to that. I do have some opinions on that as well. I think it's one of the industries where you can't really expect a lot of growth. I think it's highly tied to GDP and just overall growth of a country. But I also think the only way to grow for these companies is to focus more on the emerging markets, India, Latin America, maybe Africa. I think that's where the growth will have to come from. But I think we'll get to that in the bear base and bull case for the industry. So, Sonny, do you have anything before we head on to the BBB cases?
I'll just give us a sort of very brief overview of the growth, and just touching on that because you're pretty spot on to mention it sort of ties in with GDP, because it really does. Over the past 5 years or so, we've seen Diageo growing at just over 5%. Pernod have just been under that. Brown-Forman have been the weakest with about 3.4%. And Campari, they've just been over 10%, and then the likes of Remy Cointreau has actually been slightly negative. So what we have seen with Campari, I think, sort of bucking the trend, as we've already mentioned, it probably has largely been driven by Aperol. And I don't know if you're familiar, but obviously we did sort of talk about the Negroni prior to this podcast, which obviously one of the key components to a Negroni is certainly Campari.
Is that revenue growth including acquisitions or organic?
I think that is just organic, but I'll need to double check that.
Okay, perfect.
Yeah, that's just to confirm. That's just organic, the revenue trend.
Okay. If you had to make an educated guess right now, Sonny, do you think the current slowing sales, the negative free cash flow cycles, the bloated inventories are structural or temporary, if you had to make a guess?
I think there's an element of cyclicality to them. I think they will start to steady out. I don't think they're necessarily going to be permanent. I think these are more temporary. I think it's the case that the spirits industry is driven by demand, and what we'll see, and I experience this almost on a daily, if not sort of weekly or monthly basis, is you see distilleries tending to shut off production because they've not got the demand to meet that production. However, just like if we take the most basic rules of supply and demand, as soon as that distillery restricts their production, they're ultimately restricting supply. But you've got to remember, something like whiskey takes 3 years to age, so we're not seeing an instant turnaround when it comes to that supply. So 3 years down the line, there's not going to be that same pull through of that spirit from that distillery. So what we could find is, yes, I think it is temporary, but this may take 2 or 3 more years until the dust settles and we start to see sort of a return to growth.
Okay. Well, Sonny, take me through your bear base and bull case for the industry. Maybe just start with the best case scenario first, if you don't mind.
Yeah, so I think what we're seeing GDP growth, or we're seeing the best case to describe it as single-digit growth. I think with a lot of these companies, what they'd be aiming for is a return to high single-digit growth or even double-digit growth. I think when it comes to the bull case of these guys, and what does the best case scenario look like for them, they've got to first of all re-engage Gen Z, which I think is a whole different. We'll come on to that because I think we need to talk about that by itself. There's also been this push towards premiumization. Again, it was very much driven by the pandemic and demand there. What we saw was there was a shift to premiumization for customers, but once that has been ultimately fulfilled across sort of 2022, 2023, and there's been a bit of a cliff edge, this demand has fallen away. So actually, we've seen in the last year, in 2024, there was an increase in volume, but actually overall there was a slight decline in value. So it demonstrated, I think that was with US spirit sales, it demonstrated that actually customers were buying cheaper, but they were still drinking. So I think there's possibly return to premiumization as well. I don't know what that looks like overall, but certainly with that, what premium spirits will do is it will also drive up gross margins and ultimately drive up operating margins. To your point, emerging markets and creating growth opportunities. There's obviously a growing global middle class in the likes of Asia, India, Latin America. This parallels a lot of our previous conversation with LVMH, but these countries are obviously creating a new middle class, a new rich class as well. And what we're finding, if it's something that I wasn't even aware of until I conducted the research for my write-up, but is that India actually has 4 of the top selling whiskies in the world, and the likes of Johnny Walker, which is Diageo's best-selling product, sort of flagship product very much for their spirits, is the 5th best-selling whiskey brand in the world, which if you'd asked me before I'd written this, I would have had no doubt and said it's probably Johnny Walker. But it just shows you how far behind the likes of these Indian-produced whiskies, the likes of Johnny Walker is. But I have, again, with doing the research, found that obviously these Indian-produced whiskies tend to be cheaper than their imported counterparts. So as you get that growing middle class in the likes of in countries like India, I have no doubt that they'll be drawn more towards the sort of premium end of Johnny Walker, which I'm not sure if you're familiar with, but has a range sort of from Johnny Walker Red right through to sort of Johnny Walker Blue at the premium end. So it actually can cater to a lot of different segments of the market. And then lastly, I think it's tricky just now with category innovation, but I think the alcohol sector has done better than both the beer and wine market, which may be reflective of the fact that they've managed to pull out a lot of that market share. So we're definitely starting to see a shift towards people consuming, but consuming with health in mind. So that may be things like hard seltzers, where we've seen significant success of the likes of brands like White Claw, which they're the low-calorie seltzers, but they still have, I think they're around 5% ABV. And then we're starting to see as well the likes of no and low spirits, which were certainly a niche in themselves. But brands like Seedlip, who Diageo actually went on to acquire, are on supermarket shelves, and they're retailing for not too dissimilar prices to a lot of the spirits, which I think is quite interesting in itself, because here in the UK, that ultimately means the retailer is not paying, or not, they don't have the cost of the duty on these, but they're still marketing and selling these products for similar prices to what is the spirit. So I think that's where we're at with the spirits market and probably what it looks like. But I do think it does require an opening of these new new marketplaces.
Yeah, everybody's been talking about alcohol consumption going down, but if you do a little bit more research and just look at the facts, it has been declining since 1890, 1809. But like you said, we have been consuming less overall, but we're spending more to enjoy the spirit a little more, on a higher quality. So it has always been in a downtrend already, and it doesn't mean that your revenue necessarily has to decline as well. If you just look at the revenue figures, they are not in the same decline as the consumption going down. So I would agree mostly with your bull case, and I think to add to that, if that were to happen and people start, especially investors, start to notice the turnaround maybe and see the same bull case we are seeing, this should also be reflected in the valuation. I mean, some of the valuations are at all-time lows. If you look at like an EV to EBIT maybe, or operating cash flow metric, I mean, getting the buybacks, getting the dividends, a higher exit multiple. If the recovery plays out, I think investors could be rewarded very well.
Yeah, I think that's fair, and I think almost we could jump into it now if you want to just talk a little bit about valuations. But a lot of these valuations are at 10-year lows, and just not in relation to this podcast, but I was listening to an episode of Invest Like the Best yesterday, which is one which will be I definitely recommend. But it was with Andrew Milgram, and he talked about how a lot of people are aware that that it's challenging and we're in a challenging financial environment. However, we're seeing these sort of tops with the S&P being at all-time highs. But I think actually where this in fact offers a good opportunity is a lot of these spirit companies are at 10-year lows. So it's running counter to how the index is running, which I think it's definitely for any contrarians out there who are looking for opportunities that aren't following the market trends, certainly worth looking at.
Yeah, I think the only reason the S&P is at all-time highs is because of the big tech. If they didn't go up like 50 to 100% this year, I mean, the S&P would have been down. Lots of companies are struggling. I mean, there's a lot going on in the world, a lot of uncertainty, tariffs going on, and the largest companies just keep proving us wrong, and investors are still excited and pretty bullish about these companies, but they are not excited about the spirits company at all. So definitely, if you're a contrarian, give it a look. So how about I give you my bear case scenario, and then we'll meet in the middle at the base case. I'll give you my bear case, and then just see if I missed anything.
Okay, go for it.
In my bear case, and I think the worries turn out to be real and lasting. So the younger generation keeps drinking less. That's a trend that will continue. Maybe even the GLP-1 drugs cut into demand even more. I think I've heard a couple of these CEOs talk about noticing a decline, Diageo and a couple others, since the GLP drug launched. Maybe even a different kind of stimulus drug. Maybe cannabis gets legalized. I don't know. Takes another slice of the market. Perhaps governments will put on even more taxes on alcoholic beverages. It gets harder to buy. Maybe even countries ban it altogether. I mean, the more that comes out, alcohol is very bad for you. It's shown in the research. So who knows? Maybe there will be a country that bans it altogether and others might follow. And then even today's valuation is still too high if this turns out to be the case. I mean, revenue stalls or shrinks. Companies have to discount to clear their inventory, which will hurt their brand image. I mean, margins will fall, and you can go on and on and on. And I think that would probably be the bear case scenario.
Yeah, I'll just echo a few of those points. I think if we start with Gen Z, there has been this narrative, and as somebody who works in the alcohol sector, it's certainly been around for a few years now that Gen Z are drinking less. However, I think we both found when we were doing our research, and thankfully just before I put my piece out, there was a bit of a sort of change in that narrative because there was some counter information coming out that I think from a recent survey of about 26,000 consumers found that 73% of those sort of aged 21 to 27 had consumed alcohol in the past 6 months, which this was sort of up from 66% 2 years prior. So obviously it's just one survey. You can't take that for granted. And but again, I do appreciate it was against 26,000 consumers. However, what I would certainly point to with that is that Gen Z are actually getting older, and maybe Gen Z over the last couple of years, those who have almost came of age or sort of moved out and have started jobs or started university, have found it more financially challenging to purchase alcohol because they've had to prioritize elsewhere. So it could be the case that Gen Z have not had money in their pocket, and in fact that's the reason they've not drank alcohol, rather than this cultural shift, which from somebody who comes from Scotland, and we have one of the worst cases of sort of alcoholism in Europe and possibly even the world, I think it is the case that there's not this cultural shift. Young people are still consuming alcohol, but to your point, it's yet to be determined if that is going to be a cultural shift or it's just temporary. If we come back to the sort of macroeconomic pressures, obviously I think one thing that maybe you didn't touch on is just obviously there has been a lot of tariffs and there's been pressure there. I can't remember the exact number, but I do think Diageo said that tariffs would hurt them by about 100 million in my write-up, and that obviously is something that is certainly for investors, that's something they need to be well aware of. And then if we just consider just the GLP-1 drugs, something I have been doing more recently, actually, just off the back of this, I think almost it put me onto it, is looking at the likes of Novo Nordisk and Eli Lilly and how GLP-1s are impacting consumer appetite. And now there is about, give or take in the US alone, there could be about 100 million potential consumers of GLP-1 drugs. And if everyone out of those 100 million consumers goes on to GLP-1s, obviously there's what does the uptake of alcohol or the consumption of alcohol look like? So yeah, from that perspective, I think there's a lot of things that are still unknown within the alcohol market. But obviously, as somebody who works in the whiskey market, I think ultimately I am bullish long term regardless, because I wouldn't choose to stay working in the market if I didn't think there was a future for it.
Yeah, that makes sense. As most things in life, the truth or the outcome is usually somewhere in the middle. So let's discuss our base case. I think my base case is probably a little different from yours, since you're a little bit more into the industry and bullish perhaps on the industry, or it would indeed make sense to start your own whiskey brand. But my base case would be that the recovery is probably a little slower and a bit bumpier than before. I think sales growth should return, probably in the low single digits, if I had to make an educated guess, somewhere between 3 to 5%. People will probably cut back on alcohol during tougher economic times, and when times are good, they would probably spend a little more on quality alcohol spirits. It probably takes another year or two or maybe even 3 to work through the inventory they build up for COVID. Companies are going to get more selective with their investments. I think most of them made a mistake. I mean, COVID was a once-in-a-lifetime pandemic, so I mean, they had to make an educated guess then, and this is what they did. I think the valuations where they are right now are probably going to stay there or pretty close to there. I think 15 times earnings for a company like Diageo is very fair, even if it starts growing revenue again. That would still give you decent returns, probably high single digits each year, a dividend, and perhaps if the cyclicality returns to normal, they could buy back some stock at the lower valuations. So you get a few percentage points there as well. But that would be my base case. I think the best years are probably behind them, but that doesn't mean that they will be best bet investments. Just look at like the tobacco companies. They are doing exceptionally well if you look at their stock prices. Yeah, I think volume will keep declining. Besides, except from emerging markets, they will probably still grow there. So that would be my base case. I'm very curious to hear yours.
I don't think I can disagree with anything you've said there. I think we're very much in this for another couple of years. I think what is interesting is obviously the last company we talked about was LVMH, which if you compare LVMH and Diageo, for example, if they're the two easiest ones to talk about, probably the two largest, it's LVMH has been, sales-wise, has stagnated as well. So this is not just spirits. This is very much the luxury sector and premium sector as well that's been affected. However, as an investor or a consumer right now, for me, I think the LVMH has a certain level of protection because they are protected with the leather goods segment of the business that has been the driver. Whereas spirits companies that are not diversified are perhaps struggling. So it's probably a question out there: can you get exposure to spirits or alcohol through LVMH and still be diversified, or is your preference to purely go out and buy spirit only companies? So I think there's still a question mark there.
To interrupt you, I do think that the difference is LVMH thesis is not built upon the spirits and champagne. I think you buy LVMH for the leather goods business mostly. And if you are going to invest in a company like Diageo, I mean, you have to know whether the spirits market is declining or growing, or you know what I mean? So I don't think it's material for LVMH.
Yeah, I would agree, and I think we've seen maybe the last 2 or 3 years of quite substantial declines in LVMH's spirit revenue. However, as somebody who maybe taking this from somebody who works in the spirit sector rather than an investor in the spirit sector, my bull case would be getting back to or reversion to the mean for the luxury goods or for the high-end, high gross margin goods sooner rather than later, and then also opening or reopening of new marketplaces, whether that be the existing ones where we've had there's been good opportunity in recent years, such as China, or even the likes of India, where there was, I'm not sure if you saw in your research, but there was a deal in place between the UK and India. There's quite substantial tariffs on Scotch whisky just now that over the next decade will bring those tariffs down from about 150% down to 75%. So there is definitely, that's as somebody who works in the whiskey market, that's my thesis. That's what I'm targeting. Whereas at the sort of lower end of high volume, low pricing, yeah, this is a tricky one, and I'm not sure how that gets back to normality, and if that's affected by things like Gen Z's drinking preferences or GLP-1s as well. So for me, it's probably high end, high profit, gross margin, premium and luxury, and that's where I think the bull case lies. I couldn't say for certain at the lower end of the market.
Over the past 25 years, the market share for wine has always been around 15 to 16%. It hasn't really changed. Beer has been declining from 55% to closer to 40%. And spirits has only gained market share. So, I mean, if you look at the trend, spirits is growing, and that is definitely a tailwind for the spirits companies and a headwind for beer companies like Heineken and stuff. So, looking at what is happening today, would you invest in any alcohol and spirits companies in today's market? Do you think it's an interesting market long term for investors, and why?
I think probably if I was to look at this as a blank canvas and not have any investments, my own opinion, and obviously just for transparency, of course, I do have some Diageo shares. I think Diageo are the best bet for, based on the size, based on even things we've not got into today, but things like the cash management within the business.
Agree, yeah.
I think it's for Diageo as well. There is just the fact that they own so much of the best brands or the most in-demand brands, such as Johnny Walker, Smirnoff, even Captain Morgan's, that have real staying power. So for me, I think Diageo is probably the best bet. And ultimately, if it's even about I think in the UK we've seen so many older people who have Diageo shares and they've held them for so long because they're a regular dividend payer and things like this. But I wouldn't perhaps be too comfortable investing in some of the smaller publicly traded companies. The Camparis, who I think Campari could even be argued as a bit overvalued just now, or the likes of Cointreau as well. I just think they don't have that global reach that somebody like Diageo has. Diageo has the marketing behind them. They've got the distribution power as well. And I think if I was to pick one of these companies, that's probably where I'd put my money.
Yeah, I agree. I think Diageo and Campari are probably the best bets. I think they manage working capital the best. They do sacrifice a little bit on profit margin, but I think you're more than compensated by the ability to rapidly turn dollars tied up in working capital into profits. I think Remy is probably the worst in class. I mean, their accounting is pretty good, especially accounting profitability, but I think they have the lowest organic growth. They have a lackluster operating return on invested capital. I think that's a company probably to stay away from. I mean, it's no advice, but just what I would do. And Pernod is actually not a very good acquirer. I mean, if you just look at some of the companies they acquired, I don't know, the balance sheet, they have intangible assets representing 50% of total assets compared to 30% for Diageo and Brown-Forman. So I don't know, just a couple thoughts on some of the companies. I think Diageo and Campari are worth looking into if you had to choose. But for me personally, if you are curious about my take, usually I like looking for must-have products or services before investing. Things people can't do without. It makes them a lot more stickier. They have more pricing power and allows for larger moats. But as you might know, Sonny, alcohol isn't really something we need, if I'm being honest. It's actually probably better for society if we don't drink it. And thus, I think, generally speaking, the industry doesn't hold the same pricing power because it's not a must-have product. It's also quite addictive and has destroyed many people's lives and families. Of course, those are the most horrible stories and no one is really supporting that. But, I'm not against investing in alcohol selling companies, whether it's beer, spirits, wine, but it doesn't attract me either. So I probably wouldn't, even if the companies dropped another 50%, invest in them. I just don't really care too much about them. I think there are more interesting ideas out there, and besides, it's not really my circle of competence.
Oh yeah, I would possibly disagree with that one then. I think with the likes of somebody like me, obviously I have a bit of an insight to work with the likes of Diageo and see how they're performing almost on a daily or a weekly basis. So it gives me a bit of a insider's edge. However, what I would I would certainly agree that Diageo shares, if they pulled back by say 50%, for me, I think that would be a very attractive investment opportunity. But that wouldn't be the case with the rest of the companies that we've perhaps talked about today. And again, obviously for companies to pull back 50%, unless it was just a downturn, you're assuming there would be some form of new news or regulation that has came out, which has caused them to drop 50%, hypothetically. However, I'd just add on that, I think there is, if we look at the historic link with humanity and how individuals have consumed, I think it's easy to say that we wouldn't invest because it's the extreme end. It's destroyed many lives, but I do think there is alcohol is not going anywhere. I think is probably the point I'm trying to make, and that with alcohol, it will be around. Spirits and whiskey, cognac, and so on will be around long after we're no longer here. Whether there was the same demand for them or not, that's yet to be determined. All you need to do is look at something like the cigarette industry or the tobacco industry, which has had massive declines probably since, if you go back to the 40s or 50s. But my last point would just be that I think when it comes to these companies, I can't see that decline being as much off a cliff edge, unless, again, happy to be proven wrong or not so much if I work in the whiskey industry, but the likes of I think GLP-1s, in my view, are probably going to create the largest amount of damage to the revenue and possibly share prices for these companies if they continue to take off as much as they have. I don't think it'll be that structural change with with the Gen Z. I think it will be something that, like GLP-1s, that will shift the market, and I think that's where you could obviously see that bear case heading.
I think maybe a good comparison is maybe Diageo or a similar company. Could be a bit like Coca-Cola. I mean, they have basically faced a lot of the same headwinds and struggles. But Coca-Cola's share price went sideways for 15 years after the 90s for basically the same reasons as today. Slow volume growth, over-reliance on pricing, changing consumer tastes, and that is basically what is happening today. And Coca-Cola overcame it, so it can be, it's pretty likely these companies will also overcome it. So yeah, those are our thoughts. Anything you'd like to say before we end today's topic on the alcohol and spirits industry? Anything we missed maybe, or?
No, I think you've actually made a valid point there that possibly the likes of the alcohol companies could be in the same basket as the likes of Coca-Cola or even McDonald's, and how, although for many years customers have bought into these, the preferences are starting to shift. My final point was this was something that came out. I would have pointed readers to it, but it came out just around the same time or just after I published my write-up. But there's a really good 4-part global spirits series by, I think, a new writer on Substack called Sector Stories. I don't know if you read her work, but she's done some really good work on the spirits industry and how a lot of these publicly traded companies are managing their cash, which is really interesting to read.
I'll make sure to link it in the show notes. So I think that's it for today. I would like to say thank you everybody for listening once again. Thank you, Sonny, once again for coming on the show. Make sure you check out Secret Sauce Investing over on Substack, and we'll see Sonny again in a couple weeks. So thanks, Sonny.
Great, Seam. Thanks for having me. I'll make sure I raise a glass of whiskey to you.
Always a pleasure. See ya.
Cheers.